Hey everybody, Scott Riley at the Market Update Desk and Mortgage One. We had another great weekend, pretty busy with phone calls with buyers, riding that wave to better interest rates and beating the others to getting offers accepted. Uh, it's December 11th. We have quite a busy week coming up. Last week in review, we had all of our jobs data come in. Well, the ADP payroll did help us in the market. The BLS jobs report kind of muted that and kept us even rather than picking up some more ground. It's interesting the discrepancies between the ADP and the BLS report. I think a lot of stuff's going to get shaken out within revisions next month from this most recent jobs report we got. This week on tap, we have a very important 10-year bond auction this afternoon. I think it's at 1 o'clock. That's going to tell the tape of today. Some of the bond auctions have not been met that successfully, so this is a kind of important one to start the week out. Now, as we go into tomorrow with CPI, inflation numbers, and then the Fed decision, and then Wednesday's wholesale inflation, and Thursday's jobless claims, here's what we're kind of thinking is going to play out within the CPI report. Now, the nice thing is we have had gas prices, WTI crude oil, has been decreasing. That's going to help us in multiple subset categories of the CPI report. Also, this month in particular, we're going to be replacing a shelter cost number that was a little over 6/10 last year with a much lower shelter cost. So we're going to get some benefit out of that. We're thinking that the headline CPI is going to come in flat, which is fantastic. And core inflation is going to come down to possibly a three handle, 3.9, probably somewhere, depending on rounding, between 3.9 and 4%. These are very positive things and shows a consistent trajectory of decreasing inflation. So the interesting thing is the Fed's going to be able to review this data before they give their commentary in their meeting tomorrow. It's not the case that we think the Fed is going to raise rates. We know they're not. The question is, what's the commentary going to say? And is Chairman Powell going to try to jawbone the market to give himself some extra play? If we can get neutral commentary from Chairman Powell and other Fed members, we have a good opportunity to break out of the channel that we're in and get to even better rates. Right now, we're a little bit concerned on this afternoon. There is a little bit of breakout above the channel trajectory of where we had been going. And we really want to see that come back down to within that channel to get us sustained better rates, both on mortgage-backed securities and the 10-year Treasury. So there's some important technicals that are happening. Now, some of those technicals are going to be trumped by the commentary tomorrow. So we're anxious to see what happens this week. We think we're going to be, by the end of the week, within fighting distance of potentially 4.06 on the 10-year Treasury. So we'll keep giving you information. We're going to look for positive news. Give us a call with questions, 616-293-2189. We hope you have a great afternoon.